Welcome to TalkTickers. We're diving straight into the recent NUMOT Corporation earnings call today.
Yeah, giving you the key takeaways without needing to sift through the whole thing.
Exactly. So let's kick off with the headline results. What's the big picture from Q1 2025?
Well, overall, a pretty strong start to the year for them. Gold production came in at 1.5 million ounces.
Okay, so that puts them on track for their yearly goals.
Seems like it, yeah. And copper was also solid 35,000 tons, right where they expected to be.
Good, good. Any standout financial numbers?
Definitely. Record first quarter free cash flow. That was $1.2 billion.
Wow, record Q1 free cash flow. Okay.
And adjusted EBITDA was strong too at $2.6 billion.
What drove that cash flow performance? Was it just operations?
Operations were a big part, but the divestments really played a key role. They've wrapped that program up now, basically.
Right, they've been selling off some assets.
Exactly. And they received over $2.5 billion in after-tax cash just this year from those sales.
That's significant. I assume that helped the balance sheet.
Oh, absolutely. They've cut debt by $1 billion since the start of 2025.
$1 billion in debt reduction already this year. Impressive.
And they've been buying back shares too, about $755 million worth in 2025 so far.
So returning cash to shareholders as well. What about their projects? Any updates there?
The main one is a Huffle North. It's still on schedule, looking good for its first gold pour in the second half of this year.
Okay, good news on the development front. And costs, how are they managing cost per ounce?
Their gold all-in sustaining cost, the AISC, was $1,651 per ounce.
$1,651. How does that stack up against their guidance?
It's consistent with their full-year guidance range, so, suggests they're managing costs effectively right now.
All right. So the overall tone from the call sounds pretty positive then.
Yeah, definitely. Reflecting those strong results and the progress they're making, especially with the divestments and debt reduction.
Okay, let's dig a bit deeper then. You mentioned record cash flow. What were the specifics there?
So the cash flow from operations specifically hit $2 billion in Q1, also a record.
$2 billion from operations alone.
Yeah, and that divestment program completion was a major theme on the call. They've really focused the portfolio now. It's down to 11 managed operations and 3 main projects.
I'm saying streamlining things.
Right. And over the past year, those sales have generated over $3.2 billion in after-tax cash. Plus, they still have almost $1.2 billion in equity and deferred payments tied to those deals, based on current prices anyway.
So there's still some value trickling in from those past sales. What about their cash on hand now?
They ended the quarter with a really healthy cash balance, $4.7 billion.
$4.7 billion. That's quite a cushion.
It is. It's well above their own target, which was $3 billion. So
yeah,
gives them a lot of flexibility.
Seems like the divestment strategy really paid off in strengthening their financial position. Did they flag any potential headwinds financially?
They did mention that working capital might take a bit of a hit in Q2.
Oh, why is that?
Mostly timing stuff. Tax payments, interest payments are due. Plus, they're increasing spending on a couple of things, the Yanacocha water treatment project and just general sustaining capital across the mines.
Okay, so planned expenditures impacting Q2 cash flow. Makes sense.
And of course, you have to remember that the cash flow from those assets they sold off, about $200 million in Q1, won't be there going forward.
Right. Natural. Okay, let's switch over to operations. They mentioned production being weighted towards the second half.
Yeah, about 52% of the year's gold production is expected in H2. Q2 should be around 24%.
Interesting. What's happening at the mine level to cause that? Let's start with Kadia.
Okay, Kadia. Production's been consistent there. They finished some planned maintenance. They're transitioning to a new area, PC23.
Right.
But that means they'll be hitting some lower grades for a while until that new area fully ramps up, probably late 2026.
So a temporary dip in grade at Kadia.
Exactly. But they are progressing development in another area, PC12, and also importantly, they're investing more in tailings management, addressing some historical underinvestment there.
Good to hear they're focusing on tailings. What about some of the other big sites, Tana-me, Boddington?
At Tana-me, the focus is underground development. They're expecting higher grades later this year, which should boost production by over 30% in the second half.
A 30% jump in H2 from Tana-me. That's significant.
Yeah. And the bigger expansion project there, the new shaft, is still on track. They're aiming for commissioning in the first half of 2027, commercial production H2 27.
Okay. And Boddington?
Boddington had a plant shut down in Q1, so they processed lower grade stockpiles, but they expect to get into higher grade ore in Q4, so that points towards a stronger second half for Boddington too.
Right, so several mines contributing to that H2 weighting. How about Lihir and Peñasquito.
Lihir had solid gold production in Q1, also completed a big maintenance shutdown. Production might dip slightly in H2 because they'll be processing some lower grade stuff. But they're setting up the mine phase, 14A they called it, for better, sustainable performance longer term, expecting higher production from 2028 onwards.
So, bit of short-term pain for long-term gain at Lihir.
Kind of, yeah. Oh, and inventory adjustments hit their Q1 costs there a bit, but that should sort itself out. Peñasquito, on the other hand, actually hit record daily production in March.
Really?
Yeah, strong gold in Q1. But the plan there is shifting towards mining more silver, lead, and zinc later in the year. So gold output will likely drop off a bit in H2, H3. Just the nature of the ore body.
Got it. It really is a complex picture managing all these different mine plans. What about Huffle North, the big project?
Right. Well, Ahafo South is doing well now, but moving to lower grades in H2, Ahafo North, the new project, is the exciting part. Commissioning starts next month.
Next month already?
Yep. First gold pour expected in the second half of this year, and then commercial production towards the end of 2025. So that's a key growth driver coming online soon.
And any other operational points? Cerro Negro?
Yeah.
Yanacocha?
Cerro Negro had some temporary milling pauses in Q1. They were focused on safety improvements, which is obviously important. They expect production to ramp back up in Q2. Yanacocha is actually doing quite well. Production is up thanks to their injection leaching tech. They see that momentum continuing.
Okay. And sustaining capital.
They flagged that sustaining capital spend will likely increase in Q2, especially at Kadia for that tailing strategy we mentioned.
Right. Okay, so strategically, looking ahead for the rest of 2025, what are the main priorities they highlighted?
Three main things, really. First, keep strengthening the safety culture. Second, stabilize performance at the remaining managed operations. And third, execute on capital returns to shareholders.
Makes sense. Safety, stability, shareholder returns. Anything else on the radar? Tariffs? Big projects?
They mentioned monitoring tariff volatility, but they feel their global supply chain gives them some diversity to mitigate impacts. The CEO specifically called out Red Chris as the frontrunner for the next major project approval.
Red Chris. What's the potential there?
They're doing the feasibility study and permitting now. The CEO seemed quite bullish, seeing potential for another Kadia, using multiple block caves, a big, long-life asset.
Interesting. Another Kadia would be huge.
Absolutely. But the main focus right now is just delivering on the potential of the current portfolio, regardless of where the gold price is. No major fleet replacements planned this year. Labor agreements seem okay. No big tariff impacts expected.
And Ahafo North production next year.
They expect it to ramp up to between 275,000 and 325,000 ounces in 2026.
Significant contribution.
Yeah.
And Lihir's longer-term outlook.
Post-2028, after this big stripping campaign, they expect sustainable gold production there to increase significantly.
Good. And debt. Any more reduction planned?
They're always assessing opportunities for further debt reduction. It ties into their capital allocation priorities. Strong balance sheet first, then funding projects, then returning capital via dividends and buybacks.
So no more big asset sales or major acquisitions planned for now.
Doesn't sound like it. Focus is definitely on optimizing what they have.
What about Wafi-Golpu, that JV and PNG?
Still talking. Constructive engagement with the PNG government to finalize agreements. That's the update there.
Okay. And they still hold stakes in Greatland Gold and Discovery Silver.
Yep, they do. Some are still subject to lockup periods, but yes, those equity stakes exist.
All right, that covers a lot of ground on strategy.
Yeah.
Now, let's move to our This Is Not Financial Advice segment. Thinking about this call, what's an outrageous but plausible trade idea that springs to mind? And again, not advice.
Okay, yeah, pure speculation here. But you look at NUMOT, strong cash flow, divestments done, portfolio streamlined, benefiting from gold safe haven status, right? So maybe you go long NUMOT. But then you think about the flip side, the risks out there, the tariff volatility they mentioned, global supply chain issues. So maybe you pair that long NUMOT position with short positions in, say, a basket of companies and sectors that are really dependent on smooth global trade and complex international supply chains, the ones most likely to get hit by tariff hikes or disruptions.
So playing the potential resilience of a gold major against the potential vulnerability of complex global manufacturers or retailers.
Exactly. The idea is, in a choppier global economic environment, a focused gold producer like NUMOT might outperform companies struggling with rising costs and logistical headaches from trade issues.
Interesting contrast. NUMOT benefiting from volatility while others might suffer from it?
Potentially. But again, strictly hypothetical. A thought experiment based on the call and the macro backdrop. Definitely do your own homework, talk to an advisor, all that jazz. This is not a recommendation.
Absolutely crystal clear on that. It's a thought-provoking scenario, though. So wrapping this up, it sounds like NUMOT had a really solid Q1.
Yeah, strong cash flow. The divestment program is wrapped up, boosting the balance sheet. Debt's down. Huffle North is on track. Lots of positive points.
The main thing to watch seems to be that production weighting towards the second half and how the individual mine plans play out.
For sure. And costs, always got to watch costs. But the strategy seems clear. Operational stability, shareholder returns, and leveraging their existing assets, plus the potential kicker from Red Chris down the line.
All right, well, thanks for walking us through all that. Hopefully, this deep dive has given you listening a clear, concise picture of NUMOT's recent call.
Yeah, hopefully useful, but remember, it's just a starting point for your own research.
Couldn't agree more. Join us next time on TalkTickers for another look inside the latest earnings calls.